Hello, and welcome to episode 41 of the Wealth Amplifier podcast. I'm Matt Liebman, joined today by Patrick Swift and Aaron Marks. Gentlemen, welcome back. How are you?
Doing well. Now that we've got some audio technical issues ironed out that we were just dealing with for the last 15 minutes or so, feeling good.
You'd think by episode 41 we'd be a well-oiled machine, but 141 we'll be ready.
I think you two are. I think I'm regressing. I don't know if it's an equipment issue, operator error, whatever it is. I'm a mess.
You have the silkiest natural podcast voice, so you can't have everything, Matt. That's the balance. The universe is balancing you out.
The universe is balancing. That's fair. That's fair. So plenty going on in the world and the market since we last met. But before we do that, I was figuring maybe we could start, Pat, with the trip you were just on and its impact or why you went, its relevance for the business, all that kind of stuff.
Yeah, absolutely. I think a lot of clients that work with me know I was out in Huntington Beach, California last week for one of the very few conferences we attend really in general these days. Conference by the name of Futureproof. It's in 4 years into its existence, I believe. It's right on the beach in Huntington Beach, California. And in terms of why it should matter for clients and why we find it interesting I find it to be a great benchmark of what is going on in our industry and how it's affecting clients. It's a big, what I would call wealth tech centralization, where all of these companies that are working on new types of technology, client-facing technology, whether it's around their trading programs or tax and estate planning or advanced comprehensive needs that clients are asking their financial advisors about these days, all the cutting-edge companies that are creating technologies are there to showcase their products, which is a really cool, quick, I think it's kind of fast and furious, but way to just digest as much as you can over the course of 2.5 days of what's going on, what are the trends, what are people thinking about. AI was a huge component of this year's conference, and I came away with it, as you guys know, with probably 15 to 20 different insights that were really interesting, and now we need to boil into business decisions, which is great. So that's the conference in a nutshell.
And yeah, I went with you, what was that, 2 years ago? And I thought It was awesome. It's hard to go back to normal conferences after that because you're on the beach. It's like, what do they call it? A festival? I mean,
festival.
That's probably a bit of a stretch. It is still a conference, but everybody's in shorts and T-shirts, sharing more on the beach. It's beautiful out there. The only issue with it is, at least for me, is it's always like the first or second week of school for the kids. So it's hard to hike out to Huntington Beach, California, but it's a really, really valuable conference. Besides AI, any other big trends, big takeaways, or big flashing warning signs? Because, in the past we've been to conferences, it's more on the investment side. But anytime there's one theme, it's it's a decent contrarian signal.
Yeah, that's a great question. I think it's hard to not observe the AI obsession that's ongoing in all of our industries. I think so that actually does give me a little bit of concern. I think a lot of these companies they're a lot of them are startups, frankly, and they have funding. And I think there's a lot of runway for them because everyone's trying to incorporate AI. So I have concern, and that's why we have to just be smart and due diligence in our decisions around if we like a tool or a product and we want to bring it into the fold. Is it gonna have staying power, not just for the industry, but is the company gonna have staying power? So that's one thing. The other one, which is more investment specific, and we've talked a lot about, is it is very much out in the open that retail investors, which is what we represent, Wall Street and the alternative investment landscape is coming for them. They want their wallet shares. And I think 2 years ago, Matt, when you and I went, it felt very wealth tech central. This year felt that same way too, but there was definitely a harder push from asset managers to be in front of advisors like us. And I think that goes hand in hand with this whole trend. And that, as we've talked about, gives me a little bit of pause just around the whole rollout of all these things.
Yeah, no, I'd be curious to sort of marry your thoughts from that with we're going to Dynasty's investor forum in, I think, about a month, which is always my favorite sort of pure investment conference of the year.
Right.
And there are usually some very interesting ideas and some contrarian takes you can take out of that. But you're right. Yeah, there does seem to be a lot of momentum, which could be a good segue into the markets. But before we do that, just one more thing on the conference. How was the concert?
Concert was incredible. It was Blues Traveler and Bush, right? Yeah. And I think they're probably most like the crux of your generation, Matt. But I was a fan of both growing up, and they sounded awesome. Knocked it out of the park.
How does John Popper look? Isn't he the lead singer of Blues Traveler?
Yeah, that's a good question. He looked pretty good. He looked, honestly, frankly, better than he did 20, 25
I think
years
he
ago.
lost a ton of weight at some point.
Yeah.
He might have to look better than he did 20, 25
Yeah.
years ago.
If you had taken a snapshot of him back then, you might not have expected him to still be here in 2025. But
before we go on, just on the conference, there are some, you hear from different tools that we're familiar with already. We use one tax planning software, and hey, there's another one that's being pitched that's better. But there's also some things that come out of the blue that you came back with. On that lending platform. We had a call 2 days ago with somebody that Pat met there. I was sort of blown away, like, wait a second, what is this and how does it work? Those are the ones that really open your eyes. There's always innovation in everything, but especially in Wall Street, and always looking to be better and cheaper and more nimble and what have you. But there's some pretty powerful ones that hopefully then, we're able to bring to you guys, to our clients and people that we're friends and family with. But you come away with one or two of those, that's pretty meaningful.
Fully agreed. Well summarized by you, I think, Aaron. Is you can, that conference is to me the best place to go if you're looking for, like you said, 1, 2, 3 super high impact, eyebrow raising opportunities for clients.
Yeah, you got to be careful with the shiny object syndrome and not just implement everything and then nothing works well. So you've got to do the due diligence and all of that. But hopefully a couple of these really do transition into our practice. Well, think about this. The things that we use now, I wonder what we might have been introduced to 2 years ago. Tax planning software, estate software.
We first learned about how 351 exchanges for ETFs worked at the Futureproof Festival.
Case in point. How about that?
Mm-hmm.
That's well
Not
said.
that we can talk too much about that, but just the general concept.
Right. Yeah, 3 enormous ones. Yeah, from 2 years ago.
Well, that's great. So I'm glad you went. I think we should continue to have representation there. And I'm sure there's some decent networking that goes on as well in that environment.
Yeah.
So we've had plenty going on in the markets recently. Aaron, Pat, you want to just sort of give us a high-level summary of where we are, and then we can talk about what's sort of catching our attention at this point.
Yeah, Pat, go ahead if you'd like.
Yeah, sure. I'll give it more of just where it feels like we are from an economic standpoint, and maybe if either of you guys want to touch on how markets have kind of performed. But to me, there's been no shortage of headlines this year. It's been a volatile year in that things have been super pessimistic and maybe also super optimistic at different times in a short period. As we sit here today in September, markets have been great, essentially globally at this point, not just in the US. And it does feel a little bit like we've had this period since April, since we had the big tariff tantrum, that there's been no shortage of bad news, but there hasn't been a lot of negative market activity. Now, to me, what I'm paying attention to, I think we're paying attention to, is some of the economics that drive things right now. I've said this a few times to clients, but I'm watching the labor market pretty closely right now. It seems like there's some cracks emerging there. Hand in hand with that is consumer spending is starting to slow down, whether that's an effect of tariffs or it's an effect of people being a little worried about their job security. Those are two really big inputs to making the whole machine turn in the U.S. That goes hand in hand with what the Fed decided to do this week, which was cut interest rates and try and buoy the economy from some of those risks. So those are pretty big things to me that are high impact indicators to be paying attention to. And that's what I've been kind of keying in on.
In a big market move recently, since the Fed cut, for the first time since 2021, the small cap index, Russell 2000, hit a new high. And, we've been talking for a while, when are things that have been out of favor going to catch up? So whether it's small caps, international stocks, and catch up, maybe there's a long way to go before they catch up. And they may never catch up with what, large cap growth and tech companies have done these last several years. However, they're starting to perform pretty well, suggesting there is a broadening out going on in the market at the same time that there is real reason for concern in some of this economic data.
Just to give everybody some reference points on where things are this year, stock market, international, S&P, if that's one thing you want to look at for the year, or broadly for U.S., up about 13% for the year. Just looked a little bit ago. International developed markets, I think, are up about 23%, and emerging markets 26% for the year. And then small caps, probably, depending on what you're looking at, still probably 10% or so, but they've had a slog for the last bunch of years. Yes, you said from 2021, Matt, did you say, was that the high?
What was the headline I saw this morning? I think it was Russell 2000.
It is, yeah. The iShares Russell 2000 ETF really has not moved in 5 years since 2021, but now at a new high.
Yeah, and as far as the economic data goes, and this one, just curious for your thoughts on this. I saw, I don't know, it was this week, last week, that unemployment, I think it was for college graduates in their early to mid 20s. I forget if it was 20 to 24, some age range like that, but was hitting about 10%. Consistent with this theme that while big companies are not laying off per se, they're not hiring either. And I do wonder if that starts to trickle into the rest of the labor market and then subsequently the rest of the economy.
100%. I think, look, it's a simple, what do they call it? A virtuous cycle when you start to have companies slowing their hiring and people being laid off. What does that translate to? Those people aren't going to be spending money as frequently and at the same clip that they were previously, which means whatever companies they were purchasing products and services for are going to suffer and their earnings are going to go down. And that means their stock prices are going to go down. That's happening. Then they're going to continue to lay people off. So that's the doom loop that I'm not predicting that. But to your point, Matt, that is a fear. And if you combo that with the obsession around AI and how pinned up the valuations are of some of these firms, it's a really reasonable risk to sort of be pondering, if you will.
Aaron, you were mentioning lending solutions a few minutes ago. Presumably, why do we think the Fed's cutting rates? I mean, do you think there's always the fear that they see something coming down the pike and the economy is in worse shape than it is. Some would argue, I think this is sort of my position, that they're just really returning to a more neutral position, that they've been a little too restrictive. But do you think it's going to have a major impact on the markets or consumer behavior or mortgages, you name it?
I don't think so. I think what you said is right. It's getting back more to neutral. They're not trying to accommodate everything and ease pressures, and maybe a little bit. There are cracks, as we said, in consumer spending and hiring and jobs and all of that. But I think it's getting more back to neutral. The mortgage applications I saw last week were the highest in a 12-month period or something. And at that point, the mortgage rates went from something like, I'm making it up, somewhere in this range, like 6.3 to 6.1. But that spurred the major mortgage application process. Hey, maybe that will start to change things if we have another 2 rate cuts and that starts to come down. But I think it's right, just more neutral, because you don't want to. They don't want to spend all of their bullets where they can help the economy in the face of a real problem. If you cut your rates too low, then they can't keep going. They have to keep them somewhat in a neutral position so they can help later if needed.
Yeah, I'll say a couple takes here. I've said before, especially in client conversations, I almost never envy being the Fed. They often almost always have a very difficult needle to thread. And this time is no different. Certainly maybe even more elevated with the political pressure that they've faced so far this year. from the Trump administration. But to me, objectively,
there's been political pressure on the Fed.
Yeah, I don't know if you guys have heard that our president. Sometimes he's a little aggressive on social media. I don't know if you guys knew that.
Is he opinionated?
Sometimes, yeah. But point being, objectively, as I look at Jerome Powell's tenure as Fed chairman, I think he's done a pretty excellent job. He's helped land the plane in a couple of different scenarios here. And right now they're sort of caught between a rock and a hard place. You have inflation concern with tariffs, which would make them want to keep rates higher, which is what they've had them at. At the same time, now you have cracks in the labor market. Those are their two mandates. So what do you do? And I think they're taking the right approach. That's my perspective. I'm curious for your guys on, it seems like, what are we, 2 days removed from the rate cut and the updated guidance? The bond market hasn't really flinched. Like the long-term rates are not under the assumption that we're entering a serious period of loosening monetary policy. And, I don't know what to think about that, frankly. Like, are we ever going to see mortgage rates back at 5 or 4%? The market right now would tell you, like, nope, not anytime soon. I was just curious if you guys.
I agree with that. I think it would take something extraordinary to get back to. You're right. You mentioned 5 and 4. Can I see 5? Yes. Can I see 4? That's not extreme, but okay, maybe you creep into the 4s, but the 3s and the 2s shouldn't be coming around again. Right. You'd hope forever. You'd say that because why do they get so low? It's because you had crisis. COVID. You had okay. We don't want that. So, and what are historical averages on mortgage rates? Isn't it 6%?
I think so.
Give or take where we are now.
We're there.
Right. Similarly, for the longest time, when you look at the actual bond market, we were close to 0% interest rates for a while. If you go, people talk about the high rate environments of the late 70s and early 80s, double digit rates. But right now, basically every treasury has sort of a different version of 4 in front of it. 4.0, 4.2, some are in the high 3s. We touched 5 a little bit, but it's a pretty tight and not that volatile bond market right now, to your point. And barring hard to have a crystal ball, but from a long rate perspective, I'd be more concerned about upside pressure on rates at some point than thinking that they're going to come, tumbling back down to where they were at their lows. So
it's an interesting point you make, and let me introduce a bit of a controversial question for both of you guys. So the economy, as we've just sort of established, has chugged along reasonably well, despite tariffs, despite volatility concerns we had a handful of years ago. Despite all these things, the economy has remained reasonably strong. However, at the same time, the sort of what I'll say the American dream of owning a house has gotten much more difficult for the younger generations. And there's all kinds of stats that bear that out. The cost of home ownership versus renting is at sort of all-time highs. It's very cost prohibitive on a average income versus average mortgage price. So pick a stat that bears out in the economy right now. Do you think that the Fed at any point should have or consider expanded tools in their arsenal to, keep their monetary policy separate from maybe mortgage policy? So influencing mortgage policy and the rates of mortgage and the price of the housing market as part of their overall purview.
I'm trying to think
what they're doing. Yeah,
I'm trying to think how that would happen.
It's a controversial kind of topic because they would have to change things.
It's almost like good.
Like almost like they would go in and buy or sell mortgage bonds like they were post GFC.
Yeah, like quantitative easing with a specific asset like mortgage bonds. I don't have a strong opinion. I'm just curious if you guys think.
I tend to think I'm not a zero government absolutist, but I tend to think that intervention should be used sparingly. Yep. And I also don't know that they can control that, what you're talking about. I don't even know if they could pull that off. I mean, Look, we had rates go up, mortgages topped out, about 8%, high 7s over the last couple of years. Mm-hmm. And home prices have just stayed super high. It's not like they haven't been able to crack the housing market. And I don't know that now bringing them down is all of a sudden going to going to magically make it easier for people to buy homes. I think that if anything, I could see the other side of the ledger at the federal government level is, do they get more involved in making it easier to increase the supply of homes, whether it's incentives for home builders, construction, and so on? Because it seems like we just have a supply shortage right now. But yeah, now in general, I guess all else equal, I'm going to side with less government intervention when it comes to markets, but all else isn't always equal.
Yeah, I think that's where I fall too. Generally, less power to large institutions around some of these things.
Shifting, just because we usually do this at the end of the summer, unless anybody had anything more on the Fed or the markets. Any big notable late summer experiences besides Futureproof that we should highlight here? My impression is that Aaron has not been eating hoagies, so I don't think we have a review today.
Lobster rolls. There's a lot of lobster rolls.
All right.
Yeah.
So you were up in Maine?
Yeah, review is go to Maine and eat lobster rolls. They're all awesome. Yeah, had a great time up there.
So as we've, I think, talked about on here before, we go up to Maine every summer for weekend to week, whatever. I don't think there are that many better things to do in the U.S. than go to Maine in the summer if you can do it. It's pretty awesome up there. Yeah,
we had a blast. A lot of vacations we do, we're always this one just seemed a little more mellow. It's a different speed up there. You can do the hiking and the sightseeing and the stuff on the water, which we did all of that, but also just sort of relaxing. It's a serene environment up there. So I was there 10 years ago was the last time when my son was much, much younger. So now that our kids are older, we had a fun time seeing all the sights. We ended up in Boston for a Red Sox game. Did the duck tours and all the touristy stuff. We had a fun time.
It's pretty great. Look, and I also, I'm not a big fan of intense heat. And it's one of the few places you can go to in the summer where it's like kind of pleasant to be outside.
Yeah, it was definitely cool at the end of the summer. Sweatshirts in the evening, sort of that quintessential New England sort of look. It was a good time.
I'd say before we get to our closing here, I just have a random question about something that I thought of it when it was happening that I should bring it up on the podcast. It has nothing to do with markets nor food reviews or anything. But I want to see if you agree with me that this is a bit of a violation. I was on the train a couple of weeks ago. I've been up in New York a lot recently for work, personal stuff. So I was on the train back late at night on Amtrak from New York to Philly, and it was a crowded train. So I did the nice thing when someone got on, and I slid over from the aisle seat, even though I prefer the aisle, let them sit down. We get to somewhere, I don't know if it was Princeton, Trenton, somewhere in Jersey. And the train sort of empties out a bit. So like it was super packed and it sort of empties out. And this guy who, by the way, not only did I let him sit down next to me by moving over, he was plugged in the socket, like over my lap. So like, I think I was a really sort of generous rider here. The train, it starts to empty out and like we maybe have 40 minutes left till Philly. And he doesn't get up and move. He just sits there. So now we have this empty train. And he and I are just sitting like squeezed in. Now, isn't it incumbent upon him to get up and go across the aisle at that point?
Yeah, you can't turn around and be the guy that just like elbows him out and say, get out of here. Absolutely, he's got to move. There's a social media, Instagram, Facebook picture of a guy who's on an empty plane. And he says that, and he takes a picture, a selfie of him, and you can see there's nobody in the entire plane except for a guy sitting right behind him. Like, get out of here, move over.
Right. No, so I was just like looking at him. And then finally I just got up and moved. I asked him if I could get out and I just moved to the other side. Because like
that's
major violation.
Absolutely.
I didn't know if I was just being sort of like old man, get off my lawn. But like it felt like
especially with the wire on your lap. Get out of here.
Right. Okay. That's what I thought as well. I just wanted to, sanity check on that.
Yes. That is, that's sociopathic behavior by that individual.
Thank you. The guy's a madman. Totally agree.
Yeah, that's insane.
So while we wrap here, what are you watching, reading? Anything interesting? Any recommendations?
Save your. I don't even know what I'm not even going to say the name of this time waster Netflix show I watched last night because I don't want you to waste your time. But the Charlie Sheen documentary was pretty captivating. If anyone has watched that one on Netflix, 2 episodes, about an hour and a half each. Man, he's a wild guy. Matt, you said it pretty aptly. Like, he's still so likable, even after all this sort of stuff. You can see why he is Charlie Sheen.
Yeah, he seems kind of like just a likable, good guy who has a whole lot of issues. And it's sort of the summer of the incredibly open and honest Netflix documentary. The Billy Joel one was also quite revealing. And I, again, liked him by the end of it. He has a lot of demons as well, but seemed like a likable guy. Matt, anything on your end?
I'm adding that to the list now, but no, there's I guess a couple things. I very interested, have not started it yet, but HBO's current flagship show, I think it's called Task.
Yes. It's
with Mark Ruffalo and that guy who was in Ozark, the brother who's kind of crazy. I guess his name's Tom Pelfrey. I was just looking up. That looks really good. It's sort of like, I would put it in there, which they've been up and down with, like their sort of True Detective category of like dark police kind of creepy anti-hero story. I have not checked it out, but it looks awesome. Have either of you guys given that a shot yet?
That's the is that based in Philly, like from the same guy who made Mayor of Easttown, I think?
It is the same creator of Mayor of Easttown. I don't know if the geography is the same or not, but I know it is the same people who did that show, which also made me even more interested because I thought that was good. Yeah, it is. Suburbs of Philadelphia, so even more reason to watch it.
Yeah, I've not seen it yet. I finally started watching Slow Horses on Apple.
Yeah, really good.
Everybody told me it was a great show, and I just like kept putting it off. My wife didn't want to watch it, whatever. Finally started watching it. I think it's awesome. And by the way, I have no idea what's happening, and I still think it's awesome. Like, I can't understand what they're saying. I don't know what's going on, and I'm still really enjoying it. It doesn't really make any sense, but I do like it.
That's good.
It's a really good one. I come back to social media. Hold on. I got to, how do I say this podcast format that won't be too embarrassing? Gary Oldman. That's the guy. Yeah. So for those who have watched, he has a lot of, crude personal bodily behavior. I
think flatulence is where
flatulence.
you're going.
Flatulence. Yeah. So he's in an interview, and I can't remember who it's with. And what they do while he's there, they put flatulence sounds on his previous roles in other movies, and he is cracking up. It is very funny to see because just how it all comes together. But very good show.
Yeah, I fell off on that one, but I would love to get back on it.
Where else can you go for market content and flatulence? This is well, good seeing you both on the podcast screen. We'll be back with some more episodes soon and some guests into year end. And that's all I got for today.
Great chat, everybody. Thank you.
Yeah. All right. See you guys.